March 2025 market update. Campbell River, BC and Canada. Prices are sliding in some areas, competition is tightening in others. And if you're not watching the shifts, you might miss your window. Hey there, Robert with Robert Nixon Personal Real Estate Corporation in Campbell River. Today, I'm bringing you your March 2025 real estate update. We're talking everything from what's happening locally in town to the broader trends across British Columbia and the national picture across Canada. Whether you're thinking about buying, selling, or developing, or just curious about where the markets are heading, this will give you the full scope. So Campbell River a snapshot of Campbell River. Let's start right here in Campbell River, where we're seeing a tale of three markets. Single-family homes. The single-family home market took a noticeable shift this past month. We're now sitting in what's officially a buyer's market. Whoa, buyer's market now? With just over 6.5 months of inventory on hand. What really stands out though is the price drop. So in February, the average sale price for a detached home was around $870,000, but by March, that price had dropped to approximately $680,000. Crazy. That's a difference of over $137,000 in just 30 days. Now don't let that monthly dip distract you completely, because they're volatile. Because when we zoom out, year over year prices are still up by nearly 4%, and that's the big pictures year over year, not the volatile. So homes in this category are still moving fairly efficiently. They're averaging about 39 days on market, so I think that's actually down, even though there's more listings. And there were 26 sales last month. So what does that mean if you're buying a detached home right now in Campbell River? You have options. You have leverage. You have options. You have leverage and room to negotiate. So opportunities for sure. Condos and apartments. Now let's move into the condo and apartment market, which is currently balanced. We're at roughly 5.8 months of inventory. Condos is just shy of being in a buyer's market, which would be over 6 months of inventory. We're at 5.8. But the numbers tell an interesting story. The average sale price jumped from just over $437,000 in February to about $509,000 in March. That's a $71,000 jump in just 1 month. Remember, the month-to-month's more volatile. It's the long term that you want to look at for true numbers. Over the past 12 months, the average price is up nearly 3%. So a little less than single family, a steady, respectable gain. Now units are taking a bit longer to move. We're seeing an average days on market of 89 days, and only 3 condos sold last month. So demand is moderate. This suggests the motivated sellers might still need to stand out with pricing incentives to be priced the best for what they're viewing. But overall, it's a fair playing field for both sides. Townhouses. And lastly, we're seeing some momentum in the townhouse segment. Inventory here has dropped to just 3.8 months. This is interesting though, which puts this into a seller's market territory. Again, we also have to remember, townhouses are the strongest market right now, 3.8 months, seller's market. We have to remember that places like Timber Ridge, 88 units, they're all available to buy right now. There's only 1 or 2 on the market, but we could write an offer on any of those right now. They may not complete until fall or even next year if you go to the back half. I actually think they've only opened up a certain amount, but those are all going to transpire into townhouses. So even though it is in a seller's market, we always know that those brand new ones that are really competitive against the used ones are available there that we can go to. So that does actually, in my mind, if you're working with an agent, they know that puts a little less pressure on you. But if you can't get up into that, mid 500 to 600 range and get the brand new townhouse and you got to stay under the 400, there's going to be a little more competition, right? You're going to, you might, if you want to stay under 500 or under 550, you might actually see that if you can get up to the 560, 580, get into a brand new one, you might see that, that $20,000 to $50,000 increase in purchase value buys you like a brand new unit compared to like an older one that you could never even renovate the whole place to compare to that at all. So that's where you have to be careful. Like maybe you go to a family member and go, hey, look, like this middle mark, we're missing out on this competitive market versus jumping up into like a brand new place. It's going to be worth more down the road, and I don't average out better, I think, in the long run. That's just my opinion. I think there's one left in oh my God. So Timber Ridge is 88 units. There's one left in Fisher Landing. There's 1 unit left. Those are priced good, 510. I think it's the last one left. The last person to get that's going to be doing good, I think. 510 for a brand new quartz countertop townhouse. Not a bad little complex. We've got a bunch of vehicles. Might be tough, but there's some parking out on the road, and I think it's a good little spot. A little bit of a busy road for the ones on the roadside, but those are priced well. Those are moving. I've sold a couple, or actually I think I only sold one. Yeah, so lots to think about. And if your agent can know what's going on in those markets and try and be familiar with it, that's always good, right? Know that there's those other ones off market, but still available that do sort of change that number if you actually put them into the equation. Hope that makes sense. So prices came down slightly month over month though, from about $573,000 to around $530,000. But year over year, again, the better one, the less volatile, are still up by more than $12,000. The home census category is selling an average of 55 days, and there was 8 sales last month. This is where things are tightening. If you're looking to buy a townhouse, competition may pick up as inventory remains limited. There is that opportunity for those new construction coming on, just depending on what your price point is, right? Provincial trends in British Columbia. So now let's take a look at what's happening across British Columbia. Across the province, we saw about 5,917,000 homes sold in March, which marks a year-over-year decline of nearly 10%. So less homes have sold this year compared to last year, 12 months ago. The average price across BC is sitting roughly around $963,000, which is down by about 5% compared to this time last year. So it's always something to consider, that national or that provincial average is down 10%. But if we're still seeing gains of 3, 4, 5% in Campbell River, that shows that we have a stronger market than the provincial average. And I think that rings true through the whole sort of downturn there in the in-migration to Vancouver. Inventory is going up in places, whereas Vancouver Island, it wasn't going up as much, right? We weren't seeing that increase in inventory and that decrease in prices that we were in other places. Simply because Vancouver Island is a little more of a warmer climate, in-migration here continued to happen. And the demand continued to maybe not say strong, but stronger than other areas through that because of in-migration. And those are stats from the Canadian Real Estate Association, right, that I've talked about before. So yeah, we're definitely outperforming the provincial average, which is great. But you need to know your local market, or your realtor, have someone advising you on what's going on, because we can't know it all. We got to lean towards the professionals, and you need to trust your realtor. If it's not me, it's someone else, but trust them to know that stuff and be able to ask them questions. And if they don't know the answers, I'll be the first one to admit I don't know the fucking answer. Let's go find it out, right? I don't know everything, and there's lots of people out there to teach us and learn from. So here's what stands out. In Metro Vancouver, inventory is building. Active listings are up by almost 38%. This is giving buyers more choice. 38%, that's crazy. But also leading to longer absorption times. So the sales to active listing ratio is hovering around 15%, which signals a fairly balanced market province-wide. But within that, some segments, especially townhomes, are seeing upward pressure on prices due to limited supply. That's interesting. So I always look at the middle market. That's what they've been trying to push, and the government's obviously looked at their stats of the middle market, right? The nurses and the people sort of middle market to try and get more housing for those people that are affordable, and that townhouses rolls right into that. I think the next best thing to that, which is some demand in, which I've talked about and I've been researching and potentially looking into building myself or have something going on, but duplexes. Duplexes are sort of in between the sort of single family, the middle market, no strata. Well, most times no strata 5, but no strata in place for your pay. But yeah, they're sort of the next best thing, maybe a little pricier than the townhouse market, but a little closer to the single family and a little more like your own home, right? Not as controlled sort of thing, a little more freedom. Seeing upward pressure on prices due to limited supply. So yeah, limited supply makes sense. The government's pushing that. They saw that coming, right? Meanwhile, TD Economist is forecasting a 4.1% price drop across British Columbia by the end of 2025. They're calling it a recalibration rather than a crash. I mean, the market's always shifting and turning and going, right? But I think in Canada, our real estate market's always been pretty strong. I don't know what it is about it, but that's a good thing. But yeah, recalibration of back up, but 5.7%. That's not bad, you know. It's always a long game. If you're an investor and you're hyper focused on the numbers, you gotta make sure your numbers work. But even as an investor, like we always say, use 3 to 5% as your average increase on a property that you can hold for 5 to 10 years. So it was down 5% last year, it went up 20% last year. We're averaged way over 3 to 5% in British Columbia and count Vancouver Island area and over the long run. About 3 to 5 is what you use. The rest goes to cash flow and maybe active appreciation where you do renovations and stuff. But if you're buying it to live in, I mean, really, you're gonna live there for 5 years, 10 years, that up and down. You don't need to dwell on those little things, the interest rates and stuff. It's going to be your home. You're not buying and selling and flipping quickly. I don't feel like you have to hyper focus on those things. Like, let your real estate agent and your mortgage broker, especially on rates and stuff, advise you the best thing that they see because their knowledge in the market. I think roll with it and don't overthink it. You don't need to stress yourself and over consume on learning this stuff and diving deep. Like, learn your business and if you want to and it's a hobby of yours and you like it, go ahead. But I think, like I said, if you're just going to live in the home, you're not buying multiple properties, you're not relying on cash flow and running as a business, this stuff is important, but in the long term, it's really not going to affect you. Buy when the time's right for you. You're secure in your job, you have the down payment, but get into the market and let the market ride up over time, because waiting for the market to fall or waiting to have enough money for your dream home is, in my mind, never going to work, because if you're waiting to save, you're not going to outsave the market when it's going up, and you never know when it's perfectly going up or down. I mean, if it is going down, maybe you wait a little bit, but that 5% drop they're talking about, I mean, I wouldn't rely on timing that, oh, it's down 5%, now I'm going to jump in, to know that it's going to go up 2%, or maybe you wait too late and it's going up because it's hot and you're in multiple offers. I think just buy when the time's right for you and get in, and think about the long goal, the long run. That's what's, I think, made me, not my most money, but like got me into the market, and just focusing on that long-term investment and building, and what's built me some wealth over time is that long outlook that, what real estate does over time, right? It's definitely not get rich quick, but can do stuff for you in the long run, whether it's get rich or just build equity and have a nice home for your family and upgrade as the long run goes. But so they're not calling it a crash, partially driven by cautious buyer sentiment and the higher cost of borrowing, even with rates edging down. I mean, cost of housing is up. I've seen it. It's hard for people. People don't make enough money. It's hard for me to look like, how do some of these people survive? But the younger people that I see buying houses are people that, like, maybe they have a family, but they have two good jobs, a camp worker and a nurse, and they have two incomes coming in. But we also have to think about the intergenerational wealth that's out there for the people that are older, the families that are getting helped by other people. There's a lot of intergenerational wealth, I think, sitting out there with parents and retired parents and stuff that are helping these younger people. I think even though it's hard for people to get into the market, the people that don't have that help, I think there's a lot of that money that's flowing back down probably still and helping these people out that can't afford it. And I've seen it. I mean, I've even been helping myself a little bit, my parents and stuff, or indirectly, but I won't get into that story. But yeah, it's just, there's always, the money's out there. I think it just depends. Some people maybe aren't in the right position to be able to have that help, which is unfortunate, but I think a lot of people do, right? And hopefully you can figure it out and get yourself in the market if you don't. National insights across Canada. And on a national scale, Canada's real estate market is still adjusting. So in February, the national home sales took a 9.8% dip. This is the biggest monthly drop we've seen since spring of 2022. So 3 years, yeah. So that drop in 2022 it happened for about a year after a crazy couple of years. And it was a year we dropped a couple $100,000 and we fell. And people after that is like, no, we're falling. And people didn't really see it. I'm like, no, we've been recovering slowly ever since. They'll never really seem to believe me, but we were, and we have been recovering since. It's been slow, but prices have been working their way back up, not down. Volatile like this, but long term, that 3 to 10% gain that we talked about in previously, right? The average Canadian home price landed just over $668,000. So not bad, which is about 3% lower than it was a year ago. So average home price nationally is down. The Bank of Canada has started cutting interest rates in an effort to stimulate activity. But so far, it hasn't had a dramatic effect on the housing market. And then again, we talked about my other video. I'm doing this one a little late this month, so this should have been done earlier before this rate cut, but they did just drop the rates, held the rates last time. So we're still seeing hesitation from both first-time buyers and investors, I think, and even builders. I think some of these builders are older and they don't really need to build, and they're not worried about because the market's unstable and they got some money, so they're just not jumping in, right? So I think it's a good time to be an investor and a developer and get out there and start taking action as the market is going to recover, and there's some uncertainty here, and you can be proactive and make sure you're clear and have a plan and make the numbers work and get in before it's competitive again. There's lots of land sitting out there available that's not moving. And globally, of course, trade tensions and economic uncertainty are adding to that hesitation. That's clear. I think everyone knows what's going on there. The bottom line, across the country, there's a cautious mood and more listings than we've seen in some time. So what does this all mean for you right here in Campbell River? Here's the breakdown. Single-family homes are now a buyer's game. Condos are balanced with selective buyers or driving competition. And townhouses, they're leaning hot with limited inventory and strong demand. And again, townhouses. I feel like duplexes aren't a big enough market to really talk about directly, but the middle market between townhouses and single family, I think, is duplexes, and I think that's something that a lot of people miss and don't talk about. In those duplex market, I think, is pretty strong. There's some developers out there that are building duplexes, and they're seeing that niche market and going after it, and I think that's where we're going to. If you're a seller, pricing strategically matters more than ever. If you're a buyer, you're in a better position to negotiate. But don't sit on your hands for too long if you're eyeing a townhouse. Take action. Know what you want, know what you're looking for, and take action when it's there. So I'd say interest breeds interest. If you're interested in these, been sitting for a long time, someone else is probably going to be interested at the same time. It just seems to happen like that, right? So just when you see it and when you want it, you take action. If you're not sure and you're okay losing it, then sit back and just see what's going on, look for something else, and maybe go back to it. But if you want it, don't worry about everyone else is thinking, the sellers or the other buyers, and take action on it in any market, I think. So if you're thinking about a move, if you're thinking of making a move, don't try to figure it out alone, right? So it goes back to trusting someone and getting that advice. Give me a call or a shout, shoot me a message. I'm Robert Nixon. I'll be happy to help you understand what the numbers mean for your specific situation. Whether you're buying your first home, scaling up, investing, or selling, you definitely deserve a strategy that works with where the market's heading and not where it's been. Definitely not looking at the past, but in real estate, sometimes looking at the past, the overall long past is the trending. It's going to trend up over time. Just like inflation, it's never going to end because that's what in my mind, it keeps the world growing. If we didn't have inflation, you can't just deflate things all the time. We'd have a collapse, right? It always has to inflate over time, which is why I think in the long run, this has happened with money and land and everything over time. It all inflates because it all grows, and that's what keeps our world moving, right? So that's my thought on it, but I'm not a professional either in that field of economics, but I do follow a few people, and that's sort of what I see, right? I mean, you can't deny inflation, and it's always happening, and same with real estate. The trends show over time. It's going to dip, it's going to down. Same with stocks. I look at my stocks as a long-time hold. I don't do like penny stocks, fast-paced. I buy them, I hold them. I buy some secure stocks like Air Canada. I get some high-risk ones in the gold mine up north of Campbell River that I'm holding that are a little higher risk, but it's some money in, and if it takes off, it's going to be great, right? But you got to look at the long picture. Trying to worry about it being too volatile, sort of an ADD type mentality can be good. I think you can play. There's money to be made in that sector if you're a professional in it. I met a guy at the John Lee event named Sankar. I got his card there. I tried to figure out what his net worth was. He wouldn't tell me, so don't tell anyone, but he wouldn't tell me, which is all good. And expect someone to share the financial information. But he started Crypto Alliance, and he actually partnered with John Lee with Crypto Alliance, and he is like a day trader with coins, right? With Bitcoin type coins. And sees the niches and buys in, and they go through the roof, and he sells at the right time before they crash. And there's a whole business around that, including stocks. Real estate's not the same, I don't think. But I think someone will look at it like that. But if that's your niche, learn it, know it, and go for it. I think do it. But if not, I think as the general population, if you're doing something else and you're not your niche, learn it. You should look at the long-term investment and buy and hold long-term. I think even with stocks or coins, go with a secure Bitcoin that's going to go up over time, or Ethereum or something or whatever. I don't know a lot about those, but buy real estate, hold it over time. Don't look at it as a volatile thing unless you're going to be a day trader or be a day coin trader. And that's your business, right? Anyways, thanks for tuning in, and I'll see you next month for another update. Cheers, Robert.